Welcome back to Squawk Box. Investors gearing up for the first trading day of the second half. Will AI stocks continue to power the markets higher? That is the question of the morning. Joining us right now, perhaps with the answer, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Why don't we go there first?
Good morning.
Good morning. Good morning. So AI,
Good morning.
AI stocks, are they really going to power us higher? Are they going to turn on us? What's going to happen?
I don't know if they're going to turn on us, Andrew. Maybe they pause for a bit. I mean, they've had a heck of a run, but I don't think it's over by any means. I think you're in the second or third inning in terms of AI. I mean, look what we learned over the weekend, that Amazon is going to spend $100 billion over the next 10 years on data centers. And so when you have all these hyperscalers spending all this kind of money, it's just so positive for the overall space in general. That being said, these stocks have had a nice move, and I do think we are going to see good earnings across the spectrum in the market. Other sectors, I think financials can play catch up. I think energy definitely can play catch up. Pockets of industrials that have pulled back most recently, especially those tied to kind of grid and power and that sort of thing, they have pulled back. I think you're getting a good look. And overall, why do I think earnings are going to be good? Is because the economy is running at about 2.5%. Inflation's coming down, and perhaps we get a friendly Fed at some point later this year. So all that kind of bodes well for not only AI, but also other parts of the market.
Okay, what's your Nvidia call at this point in the ballgame?
Oh, well, I don't own Nvidia, so I missed it. But I do think there are other ways to play it. I own Broadcom. They're the number 2 player. They're going to have about $10 billion worth of AI stuff over the next year and a half. That was actually less than $2 billion just 2 years ago. So they're going to benefit. I think the memory guys are going to do well. Applied Materials and Lam Research, KLA. Because you need 6 times the memory for AI, and so they will benefit too. So I think there's other ways to play it.
What do you think of the stragglers? I mean, when I say the stragglers, the Intels, the AMDs, the Qualcomms, that all of which would make an argument to you if they were sitting here that they are major players in this, as a lot of this stuff's going to need to go to the edge, as a lot of these models are going to get smaller. Do you buy that?
Yeah, I mean, I think that this entire trend will help a lot of companies. But the problem is you have to execute, Andrew. And I'm not sure that Intel over the last several years, well, I'm pretty sure that they have not actually executed. So you actually need to have not only the trends in your favor, tailwinds from AI and the spend and that sort of thing, but you also need to have companies that are going to do well and also have a strong strategy. Right. I think that Intel has they're involved in kind of like this investment cycle at this point in time. And so it's always hard to own companies when they are in an investment cycle mode. Qualcomm, I think, is a little bit ahead of Intel at this point. But I don't know. I mean, like I say, I prefer Broadcom on any pullback. I prefer Lam Research.
Steph, can you explain, to the extent you have a view, what you think the impact of the uncertainty around the Democratic nominee will be on the markets, which is to say, you know, I think we all sort of saw where things were going even 2 or 3 weeks ago, and now maybe we don't. And I don't know if you think that changes the dynamics at play around regulation, around taxes, around anything else, and whether you think that CEOs who might have been looking at certain types of CapEx spending in the next couple of months might say to themselves, you know what, I'm going to hold off because now I really don't know what's going to happen.
Yeah, no, and there's definitely a little bit more uncertainty at this point in time, Andrew. But what I have found in my career is that it doesn't necessarily matter so much about the presidency. It really matters about Congress. It really the makeup of Congress, right? If it's a split Congress, that's actually what the market likes. Because nothing gets done, unfortunately. I don't like to say that, but that's what the market wants. They don't want any surprises. So it's more important there than it is.
What's your S&P earnings for next year? Because we're going to have Tom Lee on, and I think he thinks he was at 270. I think he's higher now, and even if multiples could contract, and it still puts you much higher on the averages, the S&P. What do you think? Yeah. For next year?
Joe, it's either earnings or multiples, right? That's how you get higher or lower stock prices.
So what's your earnings number?
And so I do think I think you're going to see 8 to 10% this year, and I think you're going to see about the same for next year.
Would
and
that be 280?
Because the economy.
Would that be about 280, 285? Yeah, okay.